Let us discuss some of key checkpoints for selecting winning stocks. Understand the nature of the companies you own and the specific reasons for holding the stock. The reason it is really going up doesn't count. Invest at least as much time and effort in choosing a new stock as you would in choosing a new refrigerator. Separate all stock tips from a tipper, even if the tipper is very smart, very rich, and his or her last tip went up. Devote at least an hour a week for investment research. Adding up your dividends and figuring out your gains and losses doesn't count. Companies that have no debt can't go bankrupt. Look for companies with little or no institutional ownership. Buying stocks based on stated book value alone is dangerous. It's real value that counts. Moderately fast growers, that is 20 to 25%, in non-growth industries are ideal investments. Carefully consider price-earnings ratio. If the stock is grossly overpriced, even if everything else goes right, you won't make any money. Be suspicious of companies with growth rates of 50 to 100% a year. Look for companies that consistently buy back their own shares. Insider buying is a positive sign, especially when several individuals are buying at once. It's better to miss the first move in a stock and wait to see if a company's plans are working out. A lot of money can be made when a troubled company turns around. Big companies have small moves, and small companies have big moves. Avoid hot stocks in hot industries. Be patient. Watched stock never boils. When in doubt, tune in later.